All right, good evening, ladies and gentlemen. Welcome back to episode 4 now of the Australian Gold Weekly Review. I'm your host, Ved Shah, and joining alongside me, as always, is our managing partner at Gold Hub Australia and the Australian Gold Fund, Mr. Brian Chu. How are you, Mr. Brian?
Yeah, I'm doing all right, Ved. Thanks for waiting for me. It's about 11:30 p.m. on Friday night in Sydney. I was out for a social event for my son's school, caught up with some parents, and I'm in good spirits, especially given watching gold rise above 3,400 US dollars an ounce. I can tell you this, a couple of the parents talking a little bit more about gold. They're saying, I should have actually gotten in last year, early last year, when I told them that gold looks good, and it's moved up about 60%. Who would have believed in a year and a half, 60% move? But look, we got plenty to talk about, so I'll hand it back to you.
It's still not too late. I believe our viewers, if they've been listening to our commentaries regularly, I think they can still have a lot to gain if they stick around our commentaries. However, if you're watching this for the first time, welcome. This series aims to supercharge your investing journey by giving you a weekly wrap-up of movements in the precious metals and mining equities, along with a deep dive into companies we think are worth keeping an eye upon. And as always, we would also like to remind you that none of the contents that we discuss in this video constitute any form of financial advice. And if you're on the outlook for financial advice, it is recommended from our side that you seek a licensed expert. And if you've been watching our previous episodes and tuning into this as well, thank you so much for your reception, for your commitment, your engagement. And without any further ado, let's get into the commentary for this week. And of course, we start with gold. So gold in the US is up 1.06% this week to US dollars 3,408.86. Just as Mr. Brian mentioned, it's finally crossed the 3,400 US dollars mark. Whereas gold in Australia is 5,218.47 Australian dollars, and it's up 0.44%. This week, the price of gold was primarily driven by three factors. First, Fed Governor Jerome Powell's remarks at the Jackson Hole Conference did play a major role in shifting gold prices upwards this week, because the governor indicated a weakening labor market and hinted at a rate cut if the weakness of the labor market continues, which is a dovish signal for gold. And that is what led to gold prices surging and being at much higher in terms of their levels compared to last week. There's also the attempted removal of Fed Governor Lisa Cook by President Trump. That's happened this week. And according to our sources, her firing is almost guaranteed. However, there's no official news at the moment that she has been fired, which is yet another positive signal for gold, as it does disrupt the public's confidence in the independence of the Federal Reserve. And lastly, there has been a lot of anxiety among the investors about the PCE report due to be released on this Friday. Now, the market expectations as far as the PCE report is concerned, which, by the way, is what the Fed looks at mainly for inflation, it is increased slightly to 2.9%, which is a small jump from 2.8%, as I said. And this, however, is in line with the headline CPI projections for the year between 2.7 to 2.9%. So as long as the PCE data doesn't come in hotter than expected, I think the focus of the market is going to be much more on the firing or the potential firing of the Fed Governor Lisa Cook, as well as the dovish remarks made by Jerome Powell at the Jackson Hole Conference. So that's about it for gold. In terms of silver, silver did reach the $39 mark last Friday. And it did spend quite a lot of time in the $39 mark as well. However, it's now at US dollars 38.79, and it's down 0.56%. There's two reasons for that. The first one is the same as gold. There's questions over Fed's independence as a result of President Trump attempting to fire the Governor Lisa Cook, which has caused an inflow into safe haven metals, of which silver is also a part. And secondly, and more importantly, President Trump warned that he could impose a 200% tariff on Chinese goods if Beijing refuses to supply magnets to the United States. And a Bloomberg report also states that President Trump threatened subsequent additional tariffs and export restrictions on advanced technology and semiconductors in retaliation for digital services taxes that hit the American technology companies, which is supportive for silver. But I believe there's also been some profit taking happening this week, which has caused silver to slightly ride down the wave and head back to the $38 range. Though they're not close to reaching, they're quite close to reaching the 39 US dollar range again. And lastly, as far as oil is concerned, it's currently up 0.4% compared to last week at US dollar 63.855, with the gold oil ratio also increasing 0.25 barrels an ounce, with 53.6259 barrels an ounce. As far as commentary on oil is concerned, we did cover quite a lot of ground in our previous commentary. And if you haven't watched that, we'll put a link in the description. Go ahead and check out our commentary on oil last week, because we focused quite a lot on the supply dynamics of oil and how that may cause a bearish outlook for oil in the near future, though nothing is guaranteed. So, Mr. Bryan, what do you have to say about the movements in gold, the independence of the Fed, as well as the dovish remarks made by President Jerome Powell? And what does it look like for gold going ahead? Do the parents at the high schools still have an opportunity to invest and make their gains?
Okay, so as you said, Fed, we try not to provide any financial advice. We are providing opinions and an angle to interpret what's going on with the economy and also with various institutions that move the markets. So as you mentioned, we had the end of the Jackson Hole meeting, and Jerome Powell came out to provide comments about the Federal Reserve's direction going forward, and it appears that the September rate cut is highly likely. Now, when I say highly likely, the chances are much higher than 50%, probably approaching 75, 80% in the market. And there's an undertone, which is why the price of gold, silver, and the broader markets have gone up. The other development is, of course, what I would say would be the imminent removal of Federal Reserve Governor Lisa Cook. Now, as much as the media tries to spin that the removal of Lisa Cook being the first Black American woman on the Federal Reserve is racism, I would say it really doesn't matter what color she is. If she's a crook, she's a crook. And now what I mean by saying it as a crook, you have a Federal Reserve governor who is instrumental in determining what's going to happen with the interest rates, not only in America, but it also will ripple across to the broader economy. Now, there's nothing wrong with wanting a lower interest rate on your loans. You want it, I want it, everyone wants it. No one wants to pay high interest rates if they don't have to. What is Lisa Cook's crime? It's simple. You cannot, or you should not, go and claim that the house you're not living in is your primary residence so that you can get access to lower interest rates. That's fraud. It's very simple. You are lying in your application. Now, that is cause to be removed in any role, let alone a financial regulator's role. Now, there are implications on the Federal Reserve's what we call composition when Lisa Cook is removed, because Lisa Cook is a Biden appointee, and her removal, along with the recent replacement of another Federal Reserve governor, would mean that President Trump's appointees would form the majority of the Federal Reserve. Notwithstanding that the Trump administration has made very clear messages about their desires on what the Federal Reserve should do to help the Trump administration with the economic policies, you also have Federal Reserve Chair Jerome Powell retiring, or at least his chairman position ends around May next year. So if you were a Federal Reserve governor wanting to take the role of the chair, what would you naturally do? You would want to make decisions that would increase your likelihood of President Trump actually wanting to appoint you as chair. So there is that type of pressure to reduce interest rates, not only in September, but perhaps one or two more times for the rest of the year. Now, the talk about the PCE inflation rates and the core inflation rate, etc., we have established in our company, in our business at the Australian Gold Fund and Gold Hub Australia, that you have the official data and then you have reality. The two are not aligned. People in Main Street, your Joe and the Jane, your Joe Blow and your Jane Blow, they're suffering. They're facing stagnant wages, rising living costs, and the official economic data provided by bureaucrats sitting in a room playing with spreadsheets. They're saying inflation is slow. Inflation is rising slowly. The economy is going okay. And meanwhile, people who feel it on a daily basis with their wallets and their bank accounts, they don't agree. And therefore, we're in La La Land. Now, the longer we live in La La Land, people who have been suffering may look for alternatives. And we are seeing alternatives. Gold, silver, real estate, stocks, Bitcoin. That's why those are all rising. And with the expectation that Federal Reserve would reduce interest rates, chances are there will be further flow of funds into the economy, which would therefore lead to all these asset prices potentially rising. The fear of a debt-induced implosion in the economy is much lower when you have the Federal Reserve, you have the other central banks and institutions pushing funds back into the market and trying to spur economic activity, and also trying to stay away from just leaving it there and not gathering it, not gaining purchasing power. Now, that said, there is still a chance of a black swan event. I don't want people to listen to what we say and then go, oh, wait, Brian and Fed and the Australian Gold Fund thinks that there won't be any chances of a market crash because of the reduction in interest rates and a massive flow of funds. So I'm going to buy assets, I'm going to take risk, and then, oops, we're wrong. The market blows up and people are absolutely pummeled. So I always say, have a realistic view. Where we currently have a very realistic view of things, we do expect asset prices to rise. Gold would do well, but at the same time, we do look over our shoulder to read the signals and ensure that we do not invest in places where people are just chasing returns rather than also looking after the return of capital rather than just simply return on capital.
Right. Thank you for that, Mr. Brian. And there's two mistakes that I would like to bring forward. Two mistakes that I've made. First is I've referred to Jerome Powell as a Fed governor. I'm sorry for that. He's Fed chair. That's the first mistake. And the second one is I would like to remind you all that none of the content that we discuss in this video constitutes any form of financial advice. So when I did say that if the parents have an opportunity to further make gains, that was simply with reference to what Mr. Brian had said before. And we would like to remind you that none of the content constitutes any form of financial advice. And this is an information forum where we put in our expertise, analyze information, and hopefully entertain you along the way. Moving forward, The ASX All Ordinaries Gold Index is up almost 700 points at 12,926.7 points this week. Now, we've shot 4 episodes so far, this one being the 4th, and previously we used to publish market commentary reports in written formats on Gold Hub Australia's website. And we've not, I think this is the second time we've seen a jump of 700 points in all the months that we've been doing market commentary reports. So this is quite a significant jump. And I believe that this is primarily because many mid-tier and large gold producers are up between 4 to 6% this week, which have contributed to the index rise. And there are certain producers as well, which are up double digits this week. An example of that is West African Resources, that is 11% this week. However, interestingly, they have halted trading for the moment as they're in the process of preparing an announcement from the government of Burkina Faso, which we will get into later. But the point is, the ASX All Ordinary Gold Index is up 700 points this week. We've got insanely strong results from a lot of mid-tier and large gold producers. Examples being, we've got Perseus Mining, we've got West Gold Resources, we've got Regis Resources, which, by the way, was down 4% last week, I believe, and they are now up 4 to 6% this week. We've got Northern Star Resources reporting really strong results, and Evolution Mining, obviously, which we've covered in our previous video. They've got really strong annual results coming out as well. So that's pretty much it. Strong annual results, record profits, and a positive outlook for gold in the near term because of the macroeconomic environment has contributed to the rise in the index. And investors are obviously also pricing in the Reserve Bank of Australia's rate cuts, which are set to continue for the rest of the year. And oil supply dynamics as well, which could potentially push the gold-oil ratio higher. So, Mr. Bryan, do you have any comments to make about how the oil supply dynamics could play out for the gold-oil ratio and whether investors are still pricing that into gold stocks? And is that a driving force of the ASX All Ordinaries Gold Index at the moment, or is it just a strong annual results from producers?
So we're seeing that the price of oil continues to range between about 60 to 65 US dollars a barrel. Despite the oil supply and oil demand fluctuating, what seems to be happening is, I think the US is increasing the supply of oil, and the OPEC nations face that pressure of trying to maintain their market share. And therefore, by increasing supply, the price of oil continues to hold in this range. I remember that when I was at the dinner party about 2 hours ago, the price of oil went up to as much as 64 US dollars a barrel. And as I'm talking right now, the price of oil in US dollars, it's 64, sorry. But it was fluctuating between 61 and 64 this week. And I think there's a possibility it could rise even further. Now, the performance of gold stocks, as we've seen, the ASX Gold Index is now almost 13,000 points again. It actually rose above 13,000 points, I think sometime either yesterday or today. And we're not far from it reaching, breaking the all-time highs in mid-June before we had the de-escalation of the Iran and Israel tensions with the bombing of the 3 nuclear facilities in Iran. On one hand, we do have the record-breaking annual results from these gold producers. Not only that, some of these gold producers have declared higher dividends for the full year. And Ordinaries Resources is declaring, I think, a 5-cent dividend for the end of the year, full year dividend. We have also Northern Star, Regis Resources, West Gold. They're paying dividends. Evolution Mining, of course. A lot of them, they are actually reaching all-time highs. I noticed that Ramelius Resources closed this week at above $3.15, and that takes its market cap, I think it would be above $5 billion. Let me just quickly check right now. $6 billion. $3.17, $6 billion. Now, 10 years ago, I think there were only 3 gold mining companies, gold producers, that had a market cap of over $6 billion. It was Newcrest, Northern Star, and I don't think Evolution Mining was there. And Kirkland Lake Gold wasn't listed at the time. So you only had, I think, 2 companies that had a market cap of over $6 billion. Of course, we got inflation, and gold, and the price of gold is triple that price. But Ramelius Resources is producing it's expected to produce about 200,000 ounces this year in the 2026. And right now, I think there are 5 or 6 companies that have a market cap of over $6 billion. Reason why I'm bringing this up is I want everyone to have the right perspective. We are in the midst of a gold bull market. The producers have had a very good run in the last 2.5 years, almost 3 years. The ASX gold index is at record-breaking levels. The gold to oil ratio is also at historical highs, is above 50. The conditions are definitely quite accommodative for gold stocks to rise further. But if I look at the prospects of another rise in the price of gold, how much more can the operating margins rise from here? And I am a little bit cautious. As a disclosure, our Australian Gold Fund portfolio and also my newsletter readers at Factor Investment Research are selling some of their high-performing gold producers because we believe that price is determined by the market, but value is determined by what's happening on the mine sites. And the prices are moving up much faster than the value that's happening on the ground. Now, we're going to talk a little bit about West African resources after, but I want to highlight that a few of the companies that you mentioned, such as Perseus Mining, Ramelius Resources, Regis Resources, these companies have hit they have reached a point at which they need to invest more to develop their mine operations, rather than they can write off the effort that they have put in the past. They have actually invested quite a bit into the ground, and they invested into acquisitions. But now some of these acquisitions are on undeveloped properties, and they need to sink a few $100 million into the ground to increase production in order to support further growth in their operating scope and hence their market value. There are companies that have done a lot of their homework. They were investing during the tough times. The mines are in production, and now they're on the tail end. They're enjoying the tailwinds of growth. These companies include Catalyst Metals, Ora Banda Mining, Pantoro Gold. That's why we've seen a phenomenal rise in these companies, because they're on that end of their growth. But they're mid-tier companies. The larger companies are the ones that now have to digest their acquisitions and growth. So when you look at the balance of influence on how much the index is going to move, the larger companies will probably go up higher because of the sheer weights of investor funds pouring in. But the value lies in the smaller companies And therefore, I think even if the index is it will rise even further and break above the all-time record of 13,400 points, I am still leaning on taking a bit more profits and watching how some of these large companies act to consolidate their projects, expand their portfolios because they could still buy a few more deposits. And the lucky few companies that can buy small mine operations for a good price so that they can buy immediate production to expand the scope. If the large companies can do that, then there is still a chance for me to change my mind and be more bullish in buying these large producers rather than taking some profits.
All right. And with that said, let's move on to West African resources as a specific focus. So as we mentioned before, West African resources is up 11% this week. And that came after they released their half-year financial results, where the company recorded a record profit after tax of 215 million Australian dollars. They also reported an excellent operating margin of approximately 55%. Now, at Gold Hub Australia, Mr. Brian has taken the initiative to come up with a new metric called the standardized operating margin, which takes into account whether gold producers hedge their gold sales or not. And we'd like to let you know that West African Resources, there's no major difference between their standardized operating margin and their regular operating margin as well. They're both approximately at 55%. They've also got an excellent cash balance of 279 million Australian dollars, which is nearly 300 million dollars. And they are very, very well equipped to cover all their short-term liabilities as well. So quite a liquid company. And their gold sale price has increased 39% compared to half year 2024, whereas AISC has only increased 12%. So this company has got quite a reputation for maintaining extremely high operating margins. And next year round is going to be even better because the tons of ore that they're going to process next year is going to nearly double, with their production set to increase 67% with the introduction of their new gold project. However, there is some bad news for the company at the moment. The government of West African Resources, the government of Burkina Faso has proposed an acquisition of an additional 35% stake in its Kayaka gold project, as a result of which West African Resources has halted trading on the ASX until they produce the announcement which puts forward the intention of the government of Burkina Faso to acquire 35% of the Kayaka gold project. This move could have substantial implications for West African Resources' operations as well as market positioning, because, as I said, going forward next year, the plan was to process almost double the amount of tons of ore that they've been processing, and a 67% increase in production. However, if the government of Burkina Faso moves ahead with acquiring a 35% stake in West African Resources, we're going to have to see the impact that's going to have on the tons of ore that they process, which is attributable to the company itself, and the ounces of gold that they produce and how much they sell. So, Mr. Brian, what are your comments on the performance of West African Resources as a whole, as well as the implications that the potential acquisition by the government of Burkina Faso could have on the company? And also keep in mind that they've sold 4% less gold this half year compared to half year 2024, and have also produced 11% lesser compared to HY 2024. And there is a significant drop in their underground mine grade compared to HY 2024, from 8.5 grams per ton to only 6.5 grams per ton.
Okay, so my view on West African Resources as a company is that it has been one of the best development and production stories in the ASX listed gold producers for a very long time. it was one of the few companies that actually completed mine construction and began production within schedule, under budget, and the ramp up was relatively smooth. Very few producers could start a mine, whether it a greenfield mine, I would understand it to be. So it was previously not producing gold. It actually could go through, and they didn't really hit any major hiccups. Very few mines can do that, because what you do is you're modeling the resource underneath the ground. You are guessing where it's located. Then you put shovel to the soil, start digging, and you send the rocks to the processing plant. Most of the time there is a reconciliation issue where the ore that gets sent to the processing plant is lower than what you initially modeled, and the budgeting would therefore mean that you end up having a cost blowout. West Africa Resources didn't really have that much of a problem. They also had the benefit of having very high grade underground ore. I think it was M5. I think it was the M5 pit, which had produced as much as 10 to 11 grams per ton in the early stages of production. It's still producing, as you pointed out, 6.5. It's dropped, but that is still a very high grade. And including the open pit resource that they were mining out, which is relatively low grade, but because in West Africa the labor costs are much lower, then you don't need the grades to be as high as what we see in Australia in order to make it profitable. The company repaid its debt, I think, within about 18 months of production. And the share price, if you look at the share price history since it began producing its first gold in around early 2020, the share price has done quite well. Now, it dropped quite a bit from during 2022, but that was the case because the whole world, all the mining companies faced problems like that. Now, it's important to keep in mind that West African Resources, the operating margins have been very good. We have seen it above 40%, and now it's above 50%, even during the times when most companies were producing at less than 30%. So with that said, that is what a lot of investors were looking for. Now, the problem is, of course, that we have the Burkinabe government wanting to increase their stake of ownership in the Kiaka gold mine, which is now starting to produce. Now, Kiaka is expected to produce between 250,000 to even 400,000 ounces per year. And a lot of people actually want Kiaka to be as much owned by West African Resources as possible. Now, for the government to buy in, it seems like you have a government takeover. But let's be fair, this is not a government takeover because the Burkina government is paying to buy another 35% share, instead of in the past when the government requested as part of the deal to approve its development that the company has to hand over a 10, even 15% stake of the operations to the government, which is what most African nations actually do. In Australia and most Western nations, we have a royalty agreement. In Africa, it's an equity interest. Now, the government is paying for this share. We don't know what the price is, and a lot of people are now scared that the Burkinabe government is going to lowball West African Resources and buy their stake for a massive discount. Now, that's entirely possible, but that's speculative. Now, my perspective on the Burkinabe government is not as negative as most people in the Western nations have on the African governments. I know that there is a bad track record with a lot of these African regimes because we've seen in Mali, the Malian government, the Malian military regime actually seized control of certain mines, I think owned by Barrick Gold. They also detained the CEO and 2 directors of Resolute Mining late last year in order to pressure them to pay part of the taxes that they owed, even though at the same time Resolute Mining was also supposed to receive tax refunds from the government, which the government still is negotiating with them. It seems like a uneven contract. Now, Adrien Traoré is the president of Burkina Faso, and a lot of people have very mixed views about Adrien Traoré. I personally am of the view that he is an African nationalist, which means that he is acting in the best interest of the Burkina Faso people. Now, I could be wrong. So this is my opinion only, and it's not representative necessarily of the views held by the rest of the business. But I am more willing to give the benefit of the doubt to Adrien Traoré, given that Burkina Faso's social stability, I think, is somewhat better than a lot of the West African nations and also the North African nations. There is no doubt threats from the northern and northwestern border, from Islamic encroachment, from possibly Western-funded terrorist groups. I'm not going to mince any words. We do have unscrupulous Western military and non-NGO-backed militia groups who have an interest in creating chaos. We're watching these types of things happen. And certain African nations are under threat by these military groups and militia groups. Burkina Faso, I think Adrien Traoré has better control of this. So at the same time, I think that even if the deal doesn't look that good on paper right now, I am willing to give it a bit of time in order to see how Burkina Faso operates with Western-owned mining companies going forward. Burkina Faso and Oman have actually signed an agreement to develop the gold mining sector in Burkina Faso, and I think the deal was struck in the last day or two. There is no doubt a shift from Western funding to more Middle East and African funding. That may not be in the best interest of Western capitalism, but that is not to say that that would definitely mean things are going to be bad. I will like to watch how things develop on Monday. And even if the market does slump, if the price of West African resources does slump, I would weigh up the deal and I would weigh up how far the price falls and focus on the value. There is no doubt sovereign risk with this company. We are at the Australian Gold Fund and Gold Hub Australia looking to reduce our position slightly at similar prices as right now, because we were actually very bullish about the company and we did have an overweight position. So we would probably balance the position slightly. Our entry price in this company on average is about $1.20, $1.30. So we have done very well, and most of my newsletter readers at Factor Investor Research have also done similarly well. So I am not about to be Chicken Little, cover my head and go, sky's going to fall. But I am also at the same time cautious about where this goes. I would let the deal fall as it may, and we'll make our decision and our analysis following from that.
All right. Thank you so much for that, Mr. Brian. Thank you so much for a comprehensive overview of where West African Resources is and where they're headed. Obviously, the most important thing to remember from what Mr. Brian has said is that it's very important that you don't act out of fear, and you weigh the implications of the government acquiring a 35% stake, or any stake, in the Kayaka Gold project, by West African Resources after it actually happens, and not before anything has happened. So keep an eye out for everything that's going on with West African Resources. If there are significant developments, we will continue to talk about it in our market commentaries from next week onwards. And with that, we've reached the end of the episode. Thank you so much, everyone, for tuning in. However, a few gentle reminders that we'd like to give you. The first one, obviously, being that none of the contents discussed in this video constitute any form of financial advice. I think compared to the previous videos, we've been quite vocal about where the business, as well as us personally, where we stand with many of the equities at the moment. So it's important that you know that none of that constitutes any form of financial advice, and that any decision that you take by doing due diligence and performing your own research, or even better, consulting a licensed expert for the same. The second is that this series is a joint project between us and you. So we'd like to receive any form of feedback that you have, which we could implement upon our commentaries to come, so that we can better the viewing experience for you. This week, there's one specific question that we would like to have you answer is, are you satisfied with the length of our videos? We've noticed that most of our videos are between 40 minutes to 50 minutes. And I know that, and we know that it's not possible for every single viewer to be indulgent to this extent, to spend 40 to 50 minutes listening to the video. So if you have any issues with the length of the video, please let us know. And if we receive significant feedback, we can work on reducing the length of our videos from the next one. And that's it. That'll be about it for today. Thank you so much, everyone, for tuning in, and we'll see you in the next episode.
Yeah, one thing that I'm going to say is I just checked the price of gold and silver, and gold's just jumped to $34.30 an ounce, and silver just jumped above 39. It seems like just like last week, when we do the video, the price of gold and silver starts to rise. I hope that it has this is the Australian Gold Fund and Gold Hub Australia effect. Although I'm sure we're just flattering ourselves, but I hope it brings a smile to your face if you've watched the video up till now. And just like as Fed said, thanks very much. Do like and subscribe our channel and this video, and leave your comments below. We will see you next week. God bless.
I'd just like to add that I don't think it's the Australian Gold Fund effect. I think it's the marshmallow effect. It's been happening ever since he's made a feature on the show last week. And if that's the case, I think we should be doing an episode every day.
We just have to find enough rabbit holes to dig into in that case then. All right. All
right. With that, thank you so much, everyone. Thank you for watching. Please like, comment, and subscribe. Give in any feedback that you're interested in, and thank you so much for watching.
See you, and God bless.